Hi guys, I wanted to give you a quick update on the wine market. When we're talking about the wine market, I'm talking about investment grade wine. If you're not yet familiar with investment grade wine, we're talking about the 1% of the wine market. Less than 1% of all wine produced globally is investment grade. These are wines that have historically high performance and have been historically in demand. Investment grade wine falls into an area of investments called alternatives. Other alternatives that you may be familiar with are real estate, gold, venture capital, art, for example. Alternatives are essentially alternative to traditional investments. When we're thinking about traditional investments, we're really just talking about stocks and bonds. That's why real estate, even though we think of it as a mainstream asset, and it doesn't actually fall into that traditional category, which is stocks and bonds. So it is considered as well an alternative, but within that alternative category, there is another sort of subsection called collectibles. So these are things like your art, handbags, cars, watches, and of course, wine. So whiskey and wine. There are some other investment grade spirits as well, but essentially over the last 10 years, the Knight Frank Luxury Index actually tracks the performance of these collectibles, and from 2013 to 2023, in that 10-year period, wine was the second best performing behind whiskey. So it was up, I think, around 146% over that same time period. It came second to whiskey because whiskey was going through its own supply-demand boom. And basically, all investments are really just about understanding supply and demand economics, but they are influenced by slightly different factors. So wine is typically something that people look to diversify their investment portfolio because it has a low correlation to those mainstream assets like real estate, stocks. And when we're talking about a low correlation, we're essentially meaning that it's not impacted by the same factors to the same degree. So when interest rates rise, for example, your mortgage rises. If any company is holding debt, its expenses are going to go up. If its revenue is not growing at the same rate, then that gap between expenses and revenue is compressing. So it's getting smaller. It's basically what we call a margin squeeze. And so when we're sort of thinking about looking at the wine market, when interest rates go up, it doesn't have a direct correlation or a correlation to the same degree as when interest rates go up and of course your mortgage goes up. There are certain sectors like REITs, real estate investment trusts, that are either private or listed on the stock market, but obviously then are impacted by that same market dynamic. Wine, in terms of a production piece, like if a vineyard is holding debt, that's going to impact them. But wine as an asset circulating on the secondary market isn't impacted to the same degree. So something as well to consider when we're talking about investment grade wine is we had, leading into COVID, we had a really big run on the market. Basically, people weren't going out so much. They had a little bit more sort of free cash and there wasn't much to do apart from drink wine, really. And so a lot of people started to get into wine. There was this trend of premiumization, which we're still in now, and that trend is growing. So people have started to drink less but drink better quality wine. And that also, there are a few other factors at play, like younger generations are more health conscious. So that also sort of feeds into that. The millennial generation, which I'm a part of, we're very story and purpose driven. So we like to be able to invest in or even just buy things that actually mean something to us. So very purpose led and story led. From that perspective, which has also sort of increased that premiumization trend. Yeah, so there's a few different factors at play. So we had this run into the market through COVID, then we had rising interest rates, we had inflation. Obviously, when inflation increases, governments like to increase interest rates, or the Reserve Bank likes to increase interest rates, and that's essentially to pull back spending. When we go through those times, obviously there's a lot of pressure on people because salaries stay the same, costs are essentially rising in all aspects, not just mortgages. So essentially, the gap between your expenses and your salary is compressing. What that means is people tend to, during that time, liquidate assets, so free up some additional cash. that is what actually influences the wine market, because when someone is looking to free up cash, they will look at all of the assets that they have and what they can liquidate. So that is generally when we see not only a pullback in the wine market because people aren't actively investing as much because they're trying to rein in their spending, not actively invest in stuff. Also, if they're needing to free up cash flow, then they will also start selling some of those assets. So that's why going into COVID, we saw this run and we've seen this pullback over the last couple of years. Now we're sort of in that state where there's been a couple of interest rate cuts. Things are starting to stabilize. Obviously, groceries keep going up. That's a separate issue. But essentially, that means that we have a little bit more activity in the market. So October was one of the strongest markets that we've seen in the last few years for the wine market, and November has essentially continued that momentum. So, in terms of sort of a region to region breakdown, if you're someone that is sort of new to investing in wine, one of the sort of, I guess, go-to markets to look to is Bordeaux. So you've probably heard me go on about the 1855 Bordeaux classification. And if you haven't, basically, I talk about that a lot because it's quite pivotal to investment grade wine and Bordeaux. Basically, in 1855, they said, these are the best wines. And the wines classified back in 1855 have basically kept that same classification since 1855. So you have a lot of data and a very lengthy historical track record of high demand, high performance. If we're looking at the entrepreneur market, there's obviously different dynamics that play into that. But when we're talking about the secondary market, if you're not really sure what I'm meaning by secondary market, if we're sort of looking at the stock market, just to segue for a little bit and sort of draw a comparison, the primary market is essentially like when you're either a private company or about to do an IPO, this is your first release to the market. So vineyards, when they release a wine, that's the primary market. They're releasing it. Secondary market is when it's already circulating in the market. So this might be collectors that are, holding these wines and then looking to sell them. So that is what I mean by the secondary market. It's essentially the existing wines that are being circulated and traded. So when we're sort of looking at the secondary market, Bordeaux has always been a very strong market. And if you're starting out, it's got a huge historical track record through that 1855 classification. So that essentially means that it's a blue chip market. And if you know stocks, so just to draw back that comparison, blue chip essentially means that we're looking at sort of big established companies that have a track record. In the stock market, that would be typically like your banks, Apple, Amazon, these huge companies where they have that historical track record. And Bordeaux essentially is that. So it's not a speculative market, it's not new, it's not up and coming. Generally, when we talk about blue chip, we're talking about something that is more stable and less risk. So with all investments, there's always risk, but risk is on a scale of lower risk to high risk, and blue chip is more on that lower risk, more stable end of the spectrum. So not without risk, obviously, but it's less risk than if we're going to a new market or investing in a new wine that's more of like an up and coming, where it's a little bit less known, or it might have volatility in its track record where it has really big swings of people being interested in it, people not. That also as well plays into the fine wine market, because you also have certain consumer trends that play into those dynamics. So for example, during COVID, there was a huge run in champagne. And that's pulled back a little bit. The market actually itself, over I think it's like the last 5 to 10 years, it only accounted for about 2% of trades. And coming into COVID, it bumped to, I think it was like 12% of trade. So there was actually more of a market for it. And that was also driven by a lot of people drinking champagne. So the demand for some of those wines also increased. So there are a couple of things that also play into some of those factors. But coming back to Bordeaux, it is obviously this blue chip market. It did have a little bit of a pullback, obviously, as everyone pulled back in investing in the wine market over the last couple of years. We're now seeing that turn around. So Bordeaux actually claimed about 42% of traded value, so the highest of any region. Historically, it's the highest traded of any region. And within that, there's a few sort of key names that tend to sort of sit at the top, always being highly traded, not only in terms of volume, but in value. And they're your wines like your Lafite, if we're looking at the left bank, or your Petrus, if we're looking at the right bank. So when we're thinking about left and right bank, essentially Bordeaux has a river that runs down the middle. So we're just basically talking about the wines on which side of the bank. The 1855 Bordeaux classification is both left and right bank, predominantly left bank because you have the Saint Emilion classification in 1855. That's the right bank. Petrus actually sits, it's on the right bank, but it sits in a region called Pomerol, and it doesn't have a formal classification because everyone basically just agreed that it is the best wine, and it's really incredibly scarce, always in high demand, and because of that, it tends to trade well, not just in volume, but in value. So it was, again, the top traded wine overall with strong multi-vintage activity. So when I say strong multi-vintage activity, we're talking about it wasn't just a specific vintage that was trading really well. So vintages do play their part in that sort of market dynamic of what people are looking for. When we're sort of like, if we take a little bit of a zoomed out approach, mature, so when I talk about mature, we're talking about aged. Bordeaux has actually performed very well in the secondary market over in the US because with the introduction of tariffs, bringing new Bordeaux into the country is obviously more expensive. So wines already in that market that are mature, ready to drink, have been performing incredibly well. So this is where understanding consumer preferences does play a part in the wine market. So 2022 has actually been very well traded, those vintages, in the last month. And if we sort of look at why this matters, after 2 years of kind of not having as much trade activity, Bordeaux obviously seeing renewed trade activity does signal the broader market stability and confidence that's returning. Off the back of that, I'll talk about some other regions as well, but typically, when we're sort of looking at LiveX, we've got a lot of UK buyers. UK is a very strong market for wine investment. Investment side of the market in Australia is growing. That's also thanks to different trends, particularly among younger generations that are also starting to move towards alternative investments and investments of passion and purpose. So there is that sort of trend that is happening as well in the Australia market. That means that more people are getting into investment grade wine. And when we're sort of looking at the UK market, typically UK buyers tend to increase their trading activity when we go through these market cycles. So like everyone, they pull back when interest rates rise, inflation rises, because there's that increase of expenses and salaries tend to stay the same. So there's less money to invest. And essentially when we sort of see a little bit of those expenses come down or salaries start to rise, that gap is starting to widen, which is what we're seeing now. So there's renewed activity. So that is a really good sign that we're seeing more UK investors coming into the market. Typically what they're buying are Petrus. So as I mentioned, that is a very sought after wine. Also Lafite, that's on the left bank, that I also mentioned is always tends to be very well traded, both in volume and value. And then in terms of the US, you've got Screaming Eagle. This is actually now ahead of Mouton Rothschild. And in terms of the Champagne market, Cristal is what they're buying. In terms of the Italian market, Sassicaia is what they're buying. And for Burgundy, pretty much what is always generally pretty stable and sought after. A little bit like the produce in Bordeaux, you have DRC, so Domaine de la Romney Conti, and UK buyers are very value driven. So historically, we see renewed activity. We tend to sort of historically see that is then the recovery where we're starting to move into that recovery phase, which is what we are now. So before I sort of jump into other regions, we also look to Wine Market Journal data. They track auctions all around the world, and that also gives us a good sense of where the market is. They have different indices. So if I haven't yet explained what an index similar to what we have in other markets, like you're probably very familiar with stock market indexes like the S&P 500, that tracks the top 500 companies in the US, and that kind of signals what that market is like on the stock market. So the wine market has indices as well. So similar to the S&P 500, you've got LiveX indices. They track like the top 100, top 1,000 wines. They have different sort of sub-regions as well. So looking at different subsections of the market, and the Wine Market Journal also have their own indexes. So we're basically looking at a collection of the markets. So going region by region, Bordeaux is basically the comeback kid. It's capturing about 42% of trade. 2022's are really sought after, and Petrus is leading value. So this is a strong sort of market sign. Burgundy has been a little bit softer. It typically is behind Bordeaux, and DRC, as I mentioned, is always a wine that commands significant attention and significant value, and that's the same in the last month. So the overall market tone there for Burgundy is more, it's a little bit selective. Obviously DRC is so limited in terms of production. Like, this is pretty much classified one of the best wines in the world, if not the best wine in the world. In Australia, I think there's only about 10 bottles that make it into the country every year. So hopefully that gives you an understanding of just how scarce this wine is. And that plays into why it's thousands of dollars a bottle, sometimes tens of thousands of dollars a bottle. So it's incredibly, incredibly rare. In terms of champagne, so as I said, like, this market has really grown in terms of its trade activity through COVID. It was sort of below average. It's kind of steadying after a real pullback over 2023 and 2024. But you've got your players like your Cristal and those sought after champagnes perform well. The top traded champagne by value is actually Dom Perignon, the 2009 Rosé. Italy is a market that is becoming more of that blue chip market. So essentially, when Bordeaux and Burgundy have become overpriced, and even Champagne, people have really looked towards Italy. And it has a huge track record. As I said, Sassicaia is always one that is up there as top traded, both in value and volume. So there's strong, consistent investment grade demand. When we look at the Rhone and the US, so California more specifically, they don't dominate in terms of trading like Bordeaux and Burgundy do. So the Rhone is improving, so it's very niche, but it is rising, and Reyes accounts for about 40% of Rhone trade. So within these markets, there are wines that are more stable than within these niche markets. For the Rhone, you've got Reyes. For the US, you've got like your Screaming Eagle, your Harlan estate. Their other wine, Promontory, has also been driving a lot of interest. So there is momentum returning to that market. In terms of the Wine Market Journal report, White Burgundy, those sort of auctions and those auction results and the indexes that they have that track those auction results around the world, they're both in historic run territory. So really strong performance, more for mature stock. So that's pretty much where the market is at, and that's kind of why we look at different reports as well, and also where things are heading on the retail side. So the mood in November is definitely one of picking up. It looks to be in this recovery phase. We've got more buyers, more regions trading, more blue chips moving, and the auction market is also confirming what the LiveX indices are showing. So the market is starting to return and heat up, but there's also still some value in the market as it's starting to return. So wine is something that still, like any investment, carries risk. It generally has a long horizon. So it's kind of also looking at where those trends are and where your own comfort level is. But hopefully that gives some insight into the wine market and some of the factors to consider. Anyway, we've done a blog on this if you wanted to read a little bit more and see some of the graphs and more of the wines that have been trading by value and volume over the last month. Any questions, let me know. Cheers.